and welcome to Gasworks Crypto. My name's Semantic Rich and I've been investing and trading in cryptocurrency since 2017. In today's video, I'm going to share a strategy I use to assess and evaluate cryptocurrency projects. It's a multifaceted approach drawing on aspects of fundamental and technical analysis, as well as assessing general market sentiment. If I'd followed a clearly defined strategy when I started out, I would have most probably avoided impulsive buys and identified a higher percentage of 10x winners. This strategy will help protect you from yourself, as it offers a clear lens through which to view a project before pulling the trigger. To be honest, some crypto projects achieve rapid growth despite poor fundamentals, the most obvious examples being meme coins. People do make money from these crazy Ponzi schemes, but you tend to always hear the success stories, and never the thousands of failures where coins vanish overnight, never to be spoken of again. I'm going to ignore this cultural phenomenon and focus on a strategy for serious projects seeking to provide genuine utility. Fundamentals do matter, especially when the market has data at its disposal. My fundamental analysis involves analyzing a project's value proposition, the tokenomics, the team, the investors, and the roadmap. Read the white paper, but do so using a bullshit filter. Intelligent people make complex ideas easy to understand, not the other way around. If the white paper is mostly an assortment of buzzwords that lack cohesion, it's an early warning sign that the project lacks a defining purpose or identity. I usually focus on the team, the tokenomics, and the roadmap. What does the project offer, and what is its value proposition? From a very basic point of view, the projects I invest in generally aim to either make people money, save people money, or provide entertainment. If I can't see a clearly defined value proposition, I usually pass. The sector also matters. The project could possess disruptive technology, but if the sector it's aiming at is small with little room for expansion, the project may have limited potential upside. You should also ask yourself why this business benefits from being on a blockchain. Does it give it a competitive advantage? Or is it just access to cheap capital and loose regulation that are driving the developers? Who are the team behind the project and what experience do they have? Look for specifics rather than loose associations with blue chip companies. Anyone can work for a blue chip. They literally employ tens of thousands of people. There's a big difference between someone who's worked as a software engineer at Microsoft and someone who is a project head or CTO. Also look at the cliff. The time frame team members have to stay with the project before their tokens are released. It's important you understand how the token captures value within the project ecosystem. There are various types of tokens, including but not limited to utility tokens, security or equity tokens, reward tokens, asset tokens, and currency tokens. Reading the white paper should give you a clear understanding of the token economics. If it didn't, be cautious about what it is you're actually buying. If the project had a seed investor round, research the VCs and individuals that invested. It can be a very positive sign that leading names have backed a project, but also understand that they usually get to buy at a fraction of the public sale price. Remember that venture capital often uses the power law, meaning that out of every 10 companies they invest in, it's likely that only 2 will succeed. But those 2 winners are expected to generate astronomical returns. Think Uber and Airbnb, household names. Some crypto projects are highly selective about who they accept backing from. One of the reasons I recently recommended Merit Circle was because of their approach to investors. They are backed by some of the biggest names in gaming, including the founders of Axie Infinity and Illuvium. They wanted smart money and strategic alliances, rather than investors who will dump their tokens as soon as their vesting period has ended. Vesting periods are another important consideration when assessing a project. How old is the project and what have they achieved to date? Are they reaching milestones on time or have there been delays? How have the team communicated project developments with the community? Transparency, progress, and momentum are all positive signs, whereas a lack of communication and frequent setbacks could be construed as warning flags. Look at past blog posts and announcements, check Telegram and Discord, and take bias into account. Many groups can be tribal echo chambers seeking fresh blood. If the project is nearing a major milestone, such as the launch of MVP or testnet, there is likely to be price volatility leading up to the event. The same goes with major exchange listings. These tend to have a positive impact on the price. It's worth monitoring a project's website and social media to stay abreast of key dates. Although fundamental analysis is important in terms of assessing a cryptocurrency's legitimacy and long-term potential, it doesn't always predict how the market will value a token in the short term. Psychology plays an important role in market behavior that often has a greater impact on price than fundamentals. To quote Mark Douglas, people who trade and consequently move prices don't always act in a rational manner. He also concludes that as a method for projecting future price movement, technical analysis has turned out to be far superior to a purely fundamental approach. I'm not going to try and teach the basic concepts of technical analysis in this video, but I will say learning how to read charts and identify trends is a valuable skill to have in your arsenal. These are some of the things I believe are worth looking at when assessing a cryptocurrency investment. Most traders in the crypto space use candlestick charts. The candles reflect price action, where the price opened and closed within a given time frame. A series of candles can form patterns that indicate where the price may go next. It's not an exact science, but understanding price action as reflected by candles can be beneficial. It's a good starting point when learning technical analysis. The phrase, "trend is your friend," is invaluable. If the token is making higher highs and higher lows, the trend is upwards. If it's making lower highs and lower lows, the trend is downwards. It's obvious but important. It's statistically harder to make money trading against a trend than with it. Traders try to identify trend reversals, as they usually offer good entries for long or short trades. If you're interested in investing in a project, but it's been trending downwards for some time, it might be better to wait for a confirmation of trend reversal before buying. Likewise, if a token has just experienced significant price appreciation, it might be worth waiting for a retracement to get a nice entry. Price can vary between platforms and exchanges. Although arbitrage usually narrows this gap, it's always worth checking. A quick way to do this is to use data aggregation websites such as CoinGecko or CoinMarketCap. Volume is the amount of cryptocurrency traded during a given time period, usually a day. Volume data is generally gathered from exchanges. High volume increases the probability that a coin's price will change. Announcements in the media will often result in increased volume. Generally, there is a high buying volume at a support level and high selling volume at a resistance level. If you use software such as TradingView to conduct technical analysis, the volume, VPVR, and VWMA can provide valuable insights. Liquidity refers to how easily a particular asset can be bought or sold. Larger market cap coins listed on well-known centralized exchanges are typically more liquid than microcaps listed on obscure, decentralized exchanges. Volume is one of the best indicators of liquidity and can be checked quickly and easily. If you are investing in a startup crypto project that has not listed on any major exchanges, bear in mind that the tokens might be harder to sell than if you were to buy a more established project. If the project fails to gain support, there may be no buy orders waiting to fill your sell order regardless of the price. Where a coin is listed is important. Listings on leading exchanges such as Binance, FTX, Coinbase and KuCoin are positive indicators that a project is legitimate. You can check which exchanges a project is listed on by using sites such as CoinGecko or CoinMarketCap. Relative Strength Index or RSI is a useful indicator for determining whether a cryptocurrency is overbought or oversold. It's worth checking because if a token is overbought, a correction may be imminent. Likewise, if it's indicating oversold, it may be a good time to enter. Bearish and bullish divergence is another thing worth looking out for. Moving averages are a useful tool for tracking the strength and direction of a trend. Very basically, if the price is above a moving average, it signals a general uptrend. When it falls below a moving average, it signals a downtrend. There are plenty of other technical analysis methods, techniques, and indicators, and finding what works for you may take some time. TA is more of an art form than an exact science, but it can give you an edge over the market. Before aping into a project, it's always worth looking at the charts to see what's been going on and whether buying now represents a good entry. Okay, so we've used both fundamental and technical analysis to determine what a project is and how the market currently values it. Another important aspect we should consider is community sentiment. Community plays a very important role in cryptocurrency, as projects need to gain adopters and leverage them to grow further. Most of the time, a strong community is a positive sign, but bear in mind that people tweeting and posting most likely have a financial stake in the project already. The same goes for YouTube influencers. Most are either trying to get paid to mention a particular project or have a bag of coins they're trying to pump. These crypto celebrities get paid a lot of money and don't care if a certain percentage of projects fail, so long as they're making profit along the way. Be selective about who you follow, and don't be scared to seek out the negative contra-arguments. When trying to gauge community sentiment, I tend to start with the project's official social media channels, typically Twitter, Discord, and Telegram. Numbers are important, but so too are the demographics and the quality of discussion. Who are the typical investors? Are they genuinely passionate about the project, or just looking for a quick flip? After I've checked the official community channels, I tend to go to a more general forum, but specific to the blockchain the project is launching on. The search function can be a really useful tool in conducting community sentiment research on Discord and Twitter. Okay, so that's basically it. When assessing and evaluating a cryptocurrency project, try to have a multifaceted approach. Remember that no matter how great a project looks on paper, it's a highly competitive space, and the market is ruthless. If you invest in a project with excellent fundamentals, a strong community, and a healthy-looking chart, you will have more chance of succeeding than if you ape into something on a whim. When I was starting out in crypto, I also gave too much credence to the recommendations of friends. These can be great, but only if they've bothered to do the research. If you don't have time and are planning on becoming a serious investor, pay someone for high-quality market research. In cryptocurrency, as with regular stocks, information is everything. Thank you for watching this video. If you've enjoyed the content, please like and subscribe. I will be making more project-specific videos in the coming weeks where I'll be sharing some of my market research. Thank you.